Are you implying that you believe BYD can compete in each of the markets you just listed? Indeed, it is undoubtedly due to China. The most competitive market is the Chinese one. Why can't you win in other markets if you can win in the most competitive one? Look, BYD and Tesla are in a two-horse fight in China, but I don't think that lessens what Tesla has accomplished. I believe that this was a record quarter for Tesla in China, and we'll find out in the coming weeks. Imagine a scenario in which the two leading manufacturers of electric cars collaborate. Doesn't that seem like something from science fiction? Hold on to your seats, though, since this crazy situation may be closer than you think. Two titans have been fighting for years to dominate the EV market, but there are beginnings of a warming of their icy relationship. Let's introduce Tesla and its fierce competitor, BYD. When Tesla started using BYD's LFP batteries in some of its German-made Model Y vehicles in 2022, it was a startling move considering their history as bitter rivals and the first sign of a possible change. This early cooperation suggests that both sides may be realizing the benefits of collaborating. However, how would this partnership help both businesses and eventually impact Tesla's stock price and valuation? Let's investigate these options. Make sure to click the like and subscribe buttons first, though. Let's get going now. A BYD representative stated in an interview that they were hesitant to enter the US market due to its complexity. They emphasized the ambiguity around customer choices, charging infrastructure, and policies. The spokesperson underlined that businesses must invest in China or risk falling behind due to the government's strong push for electric vehicles. However, they pointed out that OEMs are unable to completely adopt EV technology because of the limitations and complexity of US regulations. Notwithstanding the difficulties, the spokesman emphasized the significance of fair competition and an open market, two fundamental principles of the American economy. But American automakers are paying attention as China's influence in places like Mexico grows. Concerns over the competitive threat posed by Chinese manufacturers have been voiced by industry heavyweights such as Elon Musk and officials from Stellantis and Ford. Do you support the notion that Chinese businesses might fairly compete and perhaps take over the market if trade obstacles were removed? Well, there's another viewpoint to take into account. Consider BYD as an example. Instead of stepping over the border into the United States, they have made investments in manufacturing in Mexico with an eye on the local market. Instead of rowing into the US, their strategy focuses on reaching the local consumer base. Let's also take a look at the history of automobiles. Do you recall the decades-old entry of Japanese brands into the American market? Similar concerns existed before then, but local brands managed to prosper in spite of international competition. It's possible that worries about Chinese competition in the electric vehicle market are exaggerated. Tesla's profit margins, meanwhile, are being squeezed and might stay that way for a few months. Even if some people are still optimistic, the truth is that Tesla's profitability may suffer this year, which would upset a lot of investors. What are your thoughts? Do you remain optimistic about Tesla? Because if you feel that way, know that you're not the only one. Who else is as optimistic about Tesla? Over at Asterisk Seeking Alpha Asterisk, our buddies. There is more to Tesla's remarkable success than merely watching from the sidelines. With the most recent information on Tesla, including stock price targets, innovation, and all things Elon Musk, Asterisk Seeking Alpha Asterisk is your one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. One of the top online sources for pro-Tesla news is Asterisk Seeking Alpha Asterisk. Get down to the facts and avoid the lamestream media's anti-Tesla rhetoric. For a unique discount, click the link in the description. However, what if Tesla modifies its strategy to increase the value of its stock? What if they choose to forge a groundbreaking alliance in the EV and automotive industries with their fiercest competitor? Just think of what could be. A partnership between Tesla and BYD might lead the way in developing autonomous driving, battery technology, and other crucial EV research areas. When combined, they could lower production costs and increase the number of people who can afford EVs. This unified front might accelerate the transition away from gas-powered vehicles and secure their dominance in the EV industry. Let's get to the bottom line, though. What effects might this partnership have on Tesla's stock price and valuation? A strategic cooperation with BYD has significant potential benefits, but it is not a surefire way to success. An alliance of this kind would boost investor trust in Tesla's long-term goals and capacity to control the EV industry. The stock price of Tesla may rise as a result of this optimistic view. Additionally, the partnership might result in faster growth and a larger market share, enhancing Tesla's standing as a pioneer in the EV revolution and possibly raising its worth. Of course, obstacles could come from internal opposition in both businesses, as well as the difficulty of finding the ideal balance between cooperation and rivalry. But a well-thought-out alliance might revolutionize the EV market, helping both Tesla and BYD, while hastening the world's shift to more environmentally friendly modes of transportation. Who knows? It could even result in a positive outcome for the price of Tesla's stock. In other developments, the leading EV manufacturer, BYD, recently debuted the U9, an ultra-luxury sports car sold in China for a hopping $233,000. It is sold under the Yangwang brand. This most recent product demonstrates BYD's approach of competing at all price points, which helped it overtake Tesla as the biggest EV manufacturer last year. I got the chance to speak with Stella Lai, the Executive Vice President and CEO of BYD America, about the company's development and its goals for markets outside of China. Lai claims that BYD observes EV adoption trends that are comparable to China's over the previous 10 years in nations like Brazil, Thailand, and Israel. Lai emphasized that BYD's performance in China's extremely competitive market portends well for international expansion and expressed confidence in the company's capacity to compete in these markets. She also emphasized BYD's emphasis on innovation, which positions the business as a leader in technology, in addition to providing chic and contemporary designs. In terms of growth, Lai disclosed plans for production plants in Thailand and Hungary, with work already underway in Brazil. In order to serve the Mexican market, BYD intends to reveal its plans for a facility in the second half of this year, focusing on the south or central region. Despite the recent drop in Tesla's stock price, some investors believe there is a chance to fund the company's wider technological projects outside of EVs, particularly considering the present pricing in comparison to a few years ago. But this optimism is not shared by other analysts. Mark Hutton, an investment director at JAM Investments, thinks price reductions and possible declines in demand will prevent Tesla's stock from ever reaching $300. Tesla's impressive profit margins, which are evidence of its operational effectiveness, set it apart from its automotive competitors. The business generated $81.5 billion in total revenue in 2022, with an outstanding operating income of $13.7 billion, which translates to a healthy margin of 16.8%. This stands in sharp contrast to its U.S. competitors, such as General Motors and Ford, which usually have single-digit margins. Tesla's profitability is influenced by a number of things. First of all, its well-known brand makes expensive advertising unnecessary. Furthermore, effective management has increased battery production capacity, streamlined manufacturing processes through vertical integration, and avoided dealership networks by selling directly to customers. These tactics increase profitability and margins. Additionally, Tesla is at the forefront of AI-powered self-driving software and is expected to enter the autonomous robotaxi market by 2024. According to ARK Invest's preliminary estimates, self-driving cars may open up a $14 trillion industry by 2027, which would further fuel Tesla's expansion. Additionally, demand for Tesla's home solar and battery storage solutions has increased dramatically. In Q1, deployments of battery storage capacity increased 360% year over year. In order to serve low-skilled industries like manufacturing, Tesla may expand its product line by releasing the Optimus humanoid robot by 2027. Even if there are differing views on the Cybertruck's appearance, fans like Alex Shannon from San Diego, who recently purchased one, are enthralled by Tesla's creative approach. Despite having been ordered without seeing it, the Cybertruck's futuristic